Hello and welcome to this session in which we will discuss cyber insurance. What is insurance? What's the idea of insurance? Insurance is a form of risk management, is a form of risk sharing or risk transfer. Simply put, you buy insurance to protect an asset, for example, your home, in case your home is destroyed, in case your home got on fire, in case someone broke into your home and stole your assets. You have insurance. Therefore, the insurance company will reimburse you. This way, you don't bear the full loss. Same concept with your vehicle. You have car insurance for your vehicle. In case you got into an accident, you protect yourself. So the insurance company will reimburse you so you can buy a new car and keep on going. So you don't have to bear the full cost. So insurance is a form of risk sharing or risk transfer. Now, as cybersecurity risk is accelerating, is becoming more common, what companies are doing, they're buying cyber insurance, and some companies are selling cyber insurance. So what is a cyber insurance policy? It's a policy to protect you against cybersecurity risks. So cyber insurance are an emerging type, it's fairly a new type of insurance that help the organization manage the financial risks associated with cyber attacks. Now we're going to look at these risks. So when a cyber attack successfully breaches an organization's defenses, the insurance can cover expenses involved in recovering lost data, restoring normal business operation, among other losses. So that's the key. The key is I'm attacked, I incurred the loss, and I don't like to bear the full loss. So what do? I buy insurance because I can't afford it. Sometimes that loss by itself could put me out of business. Also, it can compensate for revenue losses during downtime. It might assist in public relation effort to mitigate reputational damage. But as the nature of the cyber threat continue to change, insurance providers increasingly specific about what losses they cover and what criteria organization must meet to qualify for insurance. So not anyone can qualify for insurance. Let me give you a simple analogy. If you want to buy life insurance, what is life insurance? Well, life insurance, usually if you have a family, what you will do, you want to protect your family in case you passed away. And I did buy life insurance recently. So before they allow you to buy life insurance, they check your medical history. They check your medical record. Actually, they come home, they take blood sample, urine sample, they test everything that they can test to make sure they are insuring a healthy individual before they can insure you. Well, cyber insurance company, they want to make sure they're insuring companies that are responsible. Why? Because they don't want to insure someone who don't take cybersecurity risk as seriously. Then the risk is fully transferred to the insurance company, and they don't want that. And this is to make sure that both the insurers and the insured have a clear understanding of the coverage. In this session specifically, we look at criteria of what makes you qualify for life insurance. What do insurance company look for? And what losses do they cover? This is what we'll focus on. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Now to qualify, you have to qualify first. You cannot just say, I would like to buy cyber insurance and they will sell you. Well, if they do, then you have to question this because they may not be a reputable company. But you want to make sure that you have enough controls before you approach a company because this company is going to look at many things. So most cyber insurance companies require organization to implement certain risk mitigation control. So before you buy insurance, there's something called moral hazard. The insurance company wants to make sure that you are making the best to protect your asset first before they protect you. They don't want to insure someone who's negligent because then the risk is transferred to the insurance company. So that's why you have to have certain risk mitigation control before you qualify. And these controls are designed to both reduce the chances of an attack, cyber incident, and lessen the damage should one happen. Now we're going to look at some qualities or some factors that insurance companies look at, some common risk controls. I listed 12. Some of them overlap, some of them they explain each other, but let's go ahead and look at them. First, you want to make sure you have a firewall and encryptions. Using firewalls to block unauthorized access and encryption data encrypt the data for confidentiality and integrity. I would say this is a must for any insurance company. So no insurance company would most likely sell you their cyber insurance. You don't have those. Antivirus and anti-malware, installing those, and on a regular basis make sure they are updated to defend against malicious software. They don't want to protect you if you don't have those. Regular security audit and assessment, conducting a thorough security audit and vulnerability assessment to identify and rectify security weaknesses. Are you actively looking for problems and trying to rectify those problems? And that's why you need to document this. And we talked about vulnerability testing in prior session. Also, you want to make sure you back up your data, because in case an attack happened and you lost your data, the data is worth a lot of money. So do you have your data backed up? Implementing robust data backup to ensure that critical data can be restored quickly after a data loss. You want to make sure you are training your employees on cybersecurity best practices, because those are usually the first line of defense, and the importance of following the company policies to prevent breaches caused by human errors. Because let me tell you, maybe if it was your employee's fault, maybe in the agreement between you and the insurance company, they might say we are not going to reimburse you because it's your fault. You caused this. For example, if you left your car keys in the car and the car is stolen, well, the insurance company will not reimburse you because that's something that you did. It's a negligence. So you have to make sure to train your employees. Do you have multi-factor authentication, requiring multi-factor authentication to add additional layer of security for accessing sensitive systems and information? They may want to require this. Do you have an incident response plans? And we looked at this in the prior session. Having a formal incident response plan that outline the steps to take in the event of a cyber attack, which will do what? Minimize response time and mitigate damages, because they want you to have less losses because they're going to be reimbursing you. Do you have those? Background checks before they give you insurance. Companies, they want to understand the criminal history of employees who have access to their IT system to safeguard their digital asset. So for example, if you're hiring people with a questionable criminal history, and what they would do, they would ask for the employee name, social security, criminal record before they insure you. Typically, verifying the background of these employees is a standard requirement and application checklist for cyber insurance. Compliance with regulation. This involves confirming that the organization adheres to relevant legal standards, such as HIPAA for health insurance and the PCI DSS for payment data. So in case you are subject to those regulations, they want to make sure you are in compliance here, because if you're not there, why would they insure you? So compliance is important, especially for businesses that handle sensitive data and financial information of individuals. Also, you want to have a disaster recovery plan. This involves having a comprehensive recovery plan and conducting regular tests to ensure the plan effectiveness and functionality. Also, IT controls, and here's IT controls. We're going to go back and review a few things. Standard IT security control are a crucial element of any cybersecurity application. They typically include, we talked about this, firewalls, intrusion detection plan, prevention system, antivirus endpoint security system, restricted access area, and advanced authentication methods such as MFA. We looked at all of those, but this is under the umbrella of IT controls. You might have more controls or less controls. You want to make sure you have proper IT controls, and this is a sample of them. Also, loss history. Do you have a history of filing insurance claim, cyber insurance claim? If that's the case, it means in the past you are not really paying attention. You did not really protect yourself. They use this information along with the factors mentioned to determine the risk level of the client and set insurance prices accordingly. Or they might refuse you altogether, and if they accept you, they might ask for a high premium because you are a high risk. So to qualify for the insurance, you have to have proper IT controls, disaster recovery plan, and we looked at some criteria. Now, what are the insurance company cover, and what could they potentially cover? Well, it all depends what's in the contract, but think about when you insure your home. You'll tell them, for example, I want to insure my TV, my computers. Maybe you have gold. I want to, that you keep at the house, gold. If you have any valuables, you would list them, and they would say whether they are covered or not. Same thing with cyber insurance. You have to know what the policy is covering. For example, they might cover data breach costs, expenses associated with the loss of sensitive data, including the cost of notifying affected parties, providing credit monitoring services, and any legal fees incurred. So you may want to have this. But again, the more you have, the more the premium it's going to go up. You may want to cover your business interruption, financial losses due to operational downtime caused by the cyber incident. This could include lost income and cost related to restoring services and processes. That could be included. Ransom payment. If a ransom attack locks critical system or data, cyber insurance may cover the cost of the ransom payment to regain access. Now, obviously, they're going to have a limit, as well as related negotiation services. So if you get, ransom payment, somebody's trying to extort money from you, they might cover you up to a point. And the more coverage you want, the more you have to pay in premium, the more expensive for the company. Forensic analysis, cost of hiring a specialist after an attack happened to investigate the cause and the extent of the cyber breach, including the tracing of the source and assessing its impact. Legal fees and settlement, expenses related to legal action taken against the company, because people's going to sue you. They may ask for money. The insurance will kick in, including defense costs and any settlements or judgment. In case you are fined by regulators, coverage for fines or penalties imposed by regulators. Again, you might want to say yes, or maybe no to this. You can choose and select, but you want to have all of them. Public relation, cost for hiring public relation firms to manage and mitigate damage of the company's reputation following a cyber attack. Reputational damage, that's going to cost you money. Guess what? You might have this coverage. If you want it, you would check yes, and they will have the coverage. Again, more coverage means more money, more cost, more premium. What else can we cover? Information or identity theft. Cyber insurance often covers financial losses incurred when an attacker uses employee stolen identity. From what? From a cyber attack. Incident response costs. This coverage includes expenses, lost or stolen data, usually handled by external IT expert or managed service providers. Common reimbursable costs might involve labor expense, which could be very expensive. Replacement cost of information system in cases where the cyber attack leads to corrupted software or physically damaged hardware. That's considered replacement cost for information system. Cyber insurance might provide a full or a partial replacement, again, depending on your policy. Now, again, I listed 10 things. Now, if you want all of them, the more you want, the more it's going to cost you. But if you want to really protect yourself, for example, if you are not subject to any regulatory agency, then you don't want this. But if you are, you want all of them. You want all of them. Let's take a look at this multiple choice question from farhatlectures.com. A company handling sensitive financial data needs to comply with the PCI DSS regulation. This compliance is important for obtaining cyber insurance because it demonstrates what? So if you handle financial sensitive data, most likely you're going to be required to be in compliance with the PCI DSS. And what is PCI DSS? It's the payment card industry data security standards. So basically you process credit card payment or you handle sensitive financial data. So if you are in compliance, okay, it's important for what purposes? What does it demonstrate? Effective cost management? No, it doesn't. Compliance, if anything, it increases cost. Compliance with applicable data security standard. Yes. That's why you want to show this, that you're in compliance. Otherwise, if you're not in compliance, they will not even sell you the insurance. Enhance customer service capabilities. PSI doesn't necessarily enhance. Sometimes it could hinder them because of regulation and protection. So C is out. So now B is the best answer so far. So it's between B and D. Innovative IT development strategies. No, the compliance doesn't have anything to do with innovative IT development strategies. The answer is B as in boy. what should you do now? You want to go to Farhat Lectures, look at additional MCQs. That's going to help you, especially if you're studying for the Information Systems and Controls CPA exam section. Invest in yourself. Good luck, study hard, and of course, stay safe.